Alrighty, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Let's take a look here. I want to address just a couple things and we'll go out and make a trade here. Um, First thing here, TLT. I've gotten a lot of emails about TLT, um, all different ones. TLT, need to keep in perspective what this trade was. This trade was for the 100K challenge. We had a little bit of money left. I we got into it on a great entry. It shot up, was still $2 short of our price target. Started to break the 7, broke down, and now we need a pretty good bounce to come back on it. Do we have catalysts that could make that happen? Sure. But one of the things with TLT was asked why I didn't get out of it when it broke the 7. And that's simply because of the context of the trade. It was for the challenge, and when we made the trade, we said 110 or bust. And it's obviously going to affect the last challenge, and we'll end up with our 3K loss if the TLT doesn't really come back here for us. But that TLT trade was in the context of the challenge, okay? In regards to buying more TLT here, no, this isn't a great place to be a buyer of the TLT. Do I think it has a great shot to move higher? I do, but it's not a great technical spot for it. In fact, if it comes down here and finds some support right here at 104, it's probably only going to bounce to about 106, 107, okay, to basically, get that to pay off really well here. Okay, so with the TLT, kind of just keep that in mind. I wouldn't be aggressively buying here. I can understand why you would want to buy a little bit, but be careful. Don't let the fact that I still have those TLTs for the challenge and the context of that TLT trade, sway you and think, oh, well, you need to go buy TLT here, because that's not the case. And that's not the case. Looks like we're having some audio video in and out. Okay, let me see here. Let me restart it here. Stable now? Okay. All right. Yeah, I'm not quite sure. I know when I started it, it looked a little bit different to me. But so that's kind of TLT. That's the context there. And overall here with TLT, please, those of you that are looking to buy some TLT here, please keep in mind the context. The fact that I still have the TLT for the last challenge, that doesn't mean I'm going to put a lot of money here on TLT right here. Remember, that was not a lot of money. And really, that trade is more of a product of the trades that didn't work for us, kind of going into TLT, more than a product of TLT itself. And will we get another entry opportunity on TLT? Sure, we may. In fact, a lot of times after jobs reports, we do get interesting moves on TLT, and I would expect for that to happen here with TLT at the end of the week here. Okay. All right. So market itself. Okay. Market down about a point here. It's had a pretty interesting dragonfly doji here. These dragonfly type dojis, they are typically reversal patterns that you'll see come in after a long downtrend. So if a stock's been selling off and you get this little dragonfly doji action, let me kind of zoom in here so you can see it a little bit better. But you get this dragonfly doji action where you have a real small body at the top and you have kind of this long wick on the candle. Okay. When these happen after major downward trends, okay, that tends to be pretty bullish and you tend to get some upside on it. Okay. When they happen after major uptrends, okay, a lot of times they're referred to as hanging man candles, because they're basically signs that the dip buyers are getting exhausted, and you tend to see a move lower. Here we're seeing that happen in the context of a consolidation, right? I mean, the market, there's no doubt that it's overbought, okay, but to say the market has to go down here, not necessarily. And so we're seeing this more of a product of the consolidation than we are of a dragonfly saying, hey, the stock has to go up or the stock has to go down in the context of the broader market. And if we kind of look at some of the market variables, we're seeing a very similar candle in the IWM. Very not as similar here on the Dow as the Dow gap down bigger. The Dow is showing different. But with the S&P, with the Russell, if we come into the Qs, we're seeing generally bullish candles here, but they're happening in the midst of a consolidation, and so they don't necessarily mean as much going on with those. Let me show you the trade that I'm looking at that I've priced out here and talk through it. Haven't made the final decision on it. I want to wait just a little bit closer to the close to take care of it. Before looking at Goldman, let me show you XLE. XLE is at the point we've had bearish action at 87, bullish action at 86. Because the option expires here in 10, 11 days, we're only a couple days away from really, even if XLE breaks down, of not really being able to get a lot of profit on it. Okay, so with the XLE, if we see XLE at any time here break 87 from here going forward, I will absolutely pull it off. Okay, and still looking for it to have the breakdown. Would love to see some follow through on it tomorrow. We have some potentially bearish action in Exxon and in Chevron, or excuse me, with Exxon, but we have with Chevron equally bullish action. So, we still have a strong mix here. Conoco breaking down. The OIH, you can see kind of the oil services sector kind of doing the same thing as the XLE. So we still have this consolidation going on. Is there going to be any resolution to it right away? Well, maybe, maybe not. But if XLE breaks 87 here one more time, I'm going to have to leave and move on out of there. Overall, from an hourly perspective, the chances of it following through to the downside are very good, with us not setting a new high here today or yesterday, and with it staying below the 7-day average, breaking above the 7-hour moving average earlier and now pulling back down. Our indicators are in our favor and everything else, but we need it to start to happen quickly there. The trade that I'm looking at getting into here is Goldman Sachs, and I talked about Goldman Sachs during the candlestick challenge here today. And I priced Goldman Sachs out shortly before Carl got on video, and right after, this is what happened after I priced it. Goldman went from 161.90 where I priced things up to 162.60. And it's since fallen back a little, but some big volumes have come into Goldman. Okay, some of this has to do with some of the rumors that are circulating in regards to some of the lawsuits here against Goldman Sachs. Some of the things that the Justice Department is doing. They've been focusing on J.P. Morgan, Bank of America. There's some spec that they start to turn their eye on Goldman here. Either way, Goldman on a daily chart, okay? Goldman on a daily chart. We have a couple things here. We have this tri-star candle pattern that we talked about today. Okay, we have the tri-star pattern. Okay, great. Where do we know our stop is to be? Okay, well, it's on yesterday's high. Okay, yesterday's high around 163.25. So we know from this point we have about $1.10 risk from where it is right now. Okay, breaking the 7-day moving average here today with the tri-star pattern. Notice how it's been rising here with this little bear flag action, or not bear flag, but this ascending wedge action. Okay, where you kind of get this action after the down tick. A lot of times this is followed with another leg lower. Okay, this is also right at the retracement area of the most recent drop here on Goldman Sachs. So we're right in this retracement zone. Okay, let me draw this here and then I'll zoom it in so you can see it better. Okay, but we're right in this retracement zone, up at the resistance from the wedge. Now, could it go higher? Sure, it absolutely could. But notice how it's been ticking up here on very little volume. It's also been underperforming the broader market. Okay, we have the broader market setting new highs while Goldman is significantly below its highs. They've had their earnings. We have some of the issues going on in the financials where the financials are underperforming. And so with this setup and with very little risk, with the way that it is set up here, I'm looking to go after Goldman. And the options that I'm looking at, okay, the options that I'm pricing here are not the normal November options. Okay, those expire in 10 days. Could we do it with those? We could, but uh, the risk reward plays out a little bit nicer as far as, hey, if Goldman's moving, Goldman can move. I just showed you, it can move 50, 60 cents at a time. It can move pretty quickly. So I don't want to have too much reaction in the options. So I'm going to come out here to the November 5 weeklies. These will expire the last Friday in November. Okay, so they're giving us about 24 days. I don't expect 24 days. I'm expecting to be in this trade for 2-3 days max, and take our profits and run. But these are November weeklies. Okay, now they're a little more thinly traded. You'll notice the open interest on them because they've just recently opened up. They haven't been available to trade for a long period of time. Um, we could come in and do this here with the November fours. Okay, and they have a little bit more open interest, and so I've priced both of those out. The November 5 weeklies, the November 4 weeklies. On both of them, we're looking at if Goldman breaks, above the stop level there of yesterday's highs. Well, excuse me, let me show you here. Okay, of the 163.25. Okay, 163.25. On both of them, we're looking at about a 25 to 30% loss, just depending on what the IV does with that. Reward potential wise, obviously we have a lot more reward potential with these November 4s, okay, than we have with the November 5s. Okay. So these are the ones that I've been kind of pricing out here and looking at. And again, kind of just giving it a little bit closer to the close here to make that decision. Let me show you here how you price those out. I just came here to cboe.com, and came up here to Tools and down to Options Calculator. And I could take my option and say, okay, you know what? We're looking at the November 22s. What are these puts going to be worth if in 2 days the price of the stock is 163.25? That's our stop, right? So they're worth about $1.19 at that point. Well, right now we'd be paying about $1.70. Okay, so we'd be losing about 50 cents. Okay, so we're losing about 25 to 30% on the trade if it doesn't go our way. Okay, we get a similar we get a similar we get a similar result if we go to the November 29s. Okay, these would be worth about $1.88 at the stop, and right now they're trading here at about 225, 230. So a little bit less risk on the November 5 weeklies. Kind of 6 to 1, and being in it for 2 days, it's not going to eat it too bad here. Both of them will have about the same amount of risk, and the November 4s will just have a little bit more reward. Could you go into the regular November options and do this at the 160 strike? Yeah, you could, but it's one of those that it's not going to be forgiving at all. It won't be forgiving at all, but at the same time, Goldman Sachs drops down here to 159, 158. they're going to start to double and triple really quickly. I don't want all the decay on the regular November. Some of that decay is going to come out tomorrow. It's going to accelerate this week, and I just don't want that. So I'm going to go with one of the weeklies. Okay. AK, yeah, okay. On this trade here with Goldman, okay, we're talking about something that's kind of still shifting and changing, right? But as it is now, it's set to close below the 7-day moving average, okay, for the first time in a week and a half, okay. The sector, the financial sector itself, doing something very similar, okay, very similar. So we have the sector and the stock. Goldman has underperformed the financial sector. And if we break Goldman down from an hourly perspective, okay, we have this little shot above the 7-hour moving average, right? Where it shoots above that. But here's the thing with Goldman and the 7-hour in this case, okay? And this is where some of these moving averages matter and don't matter. Goldman on the hourly has been in much of a consolidation mode, okay? I have a choice. I can wait for confirmation on a breakdown below the 7-hour. Okay, I can wait for that confirmation, and if I get it, be great. But I won't have as good of reward, or I'll have more risk and less reward in the trade with 163.25. I'll have more confirmation, but I won't have as good of risk reward. So it's where do you want to balance that with Goldman, given what's going on with the daily chart, given what's going on with the financial sector, the market here today, in the overall nature of the stopping point here. This is as setup as I want to see. I just don't want to see it rally 40 cents here into the close. That's really what I'm kind of concerned with. In entering right here. Do we get about a 40-50 cent rally into the close? And that is possible here, given what's going on in the 1-minute chart with this little drop here. There is some potential for that. I don't think it's very high, but anyway, that's kind of where that comes in. The 7-hour. Do I want to wait for that additional confirmation or not? Okay. And I couldn't argue with somebody who wants to wait for that. I'm probably not going to wait for that, since that won't happen till tomorrow morning with Goldman. But great observation, great question there. Just gonna kind of let this tick around here for another couple minutes here. You see the price is about 170 right here. So we could do about 6 contracts here. And as far as Goldman with this trade, as far as it goes, the 163.25 would not be a stop based on a closing price. The 163 or the 163.25 would be no matter when that happens. Okay, it would not have anything to do with opening, closing. It would be if we hit that level, we're gone with that trade here. I think I'm going to go with these November 4s. Look at 6 of them here. $1.75. Okay. I'm going to do 6 of these contracts. They're the November weeklies. They expire in 7 days. They're for the 4th week of the month. So they're not the normal Novembers. I put in a limit order here of 174. I don't expect it to fill. Just seeing if we get that. Bump it up to 175 here. And why am I arguing over it? Okay, market it at 176. Okay, 176. 176 is the entry point. Okay, these are the November. Yeah, they will expire on the fourth Friday in November, which is the 22nd. Okay, which is the 22nd will be the expiration on that. Okay, yep, the November 4s, which expire on the 22nd. Okay, or 23rd. Okay. Okay. So if we look at the calendar here, today we're at the 5th. The November 4s expire on the 22nd. Okay. So they expire here in okay in about 17 days. Okay, the normal November options expire in 10 days. Okay, these weeklies expire here in 17 days. So I'm just giving another week. And it's more from a risk reward standpoint. It's not because I need that week to be in the trade. Do I think Goldman has that potential? Well, yes, it does have the potential to go on a 3-week slide. I showed you this morning the typical trading activity in the Novembers. What we saw last year and all the way back to 2006, and how during November we typically get some sort of strong pullback, strong correction in the broader markets. Could that happen with Goldman Sachs? Yeah, I mean, it absolutely could. We start to see Goldman break 160. We're probably coming down to the lower Bollinger Band. I'm looking for it to come down there to that level. Okay. Yeah, Joe, great question. Can I comment on the choice of the slightly out of the money strike? Yeah. If I was doing the normal Novembers, I would have gone in the money. Okay, and these normally I can just price out the options. I don't go and do any option calculator because I've traded them enough. I understand what the prices are going to do. With Goldman, though, they were a little bit different. I went and priced them all out. And I originally was looking at just the regular Novembers and these 165 puts. Okay, here on the Novembers, but I get about the same amount of risk with that and not as much reward. So I basically get the same level of risk. I don't get as much reward. So I decided I'm going to just do the slightly out of the money, give just a little bit more time. Okay, Goldman falls $5 here. My reward potential on a percentage standpoint will be greater with the options I chose than if I would have gone with these November 165 puts. So it was really risk about the same, reward a little bit greater. And that's not always the case, but for Goldman and the setup, that's kind of where it panned out, and that's why I chose the out of the money strike. I'm looking as far as price target on Goldman. Okay, the major support. Okay, the major support level. Zoom in here and show it to you. But the major support is right here from this October trade. Okay, so somewhere in between this 156 and 154 level. Okay, this is the major support here for Goldman. If Goldman starts to just go down tomorrow and has a 2-3 day sell off to get to support, okay, it's likely to find some support right down in this level, probably closer to 155. That would be kind of near the lower Bollinger Band as well. Okay, that'd be near the lower Bollinger Band. Confirmation of this trade would come if today's low gets broken. If today's low gets broken, we would get the confirmation of it trading below the 7-hour. We'd get the confirmation on the TriStar. Okay, why am I not waiting for confirmation? Well, that's a choice. If you wait for confirmation, you don't have as good of risk reward as you do if you wait for confirmation. So, or as if you kind of anticipate it a little bit. So with the TriStar, happening where it is, at this retracement. Has a really nice setup, and from a risk reward standpoint, very, very nice here as well. Okay, so that's Goldman Sachs here. That's Goldman Sachs. Again, we didn't buy the regular November. Okay, we bought the November fours. Okay, we bought the November fours. The put options there. Look, I mean, Jill, I couldn't argue with you going with the November 165. I mean, I couldn't make a tremendous argument against that, but no, that's my argument for it. Let's go take a look at a couple other stocks here. I'll talk about Goldman Sachs just in a little bit here. I'll talk about it again, but take Marathon. Okay, take Marathon. Marathon reported a pretty good earnings. The only real hiccup was their investments, their hedges. Uh, went really, you get some of their oil hedges and natural gas hedges that they had on didn't do them any good, and so that took a hit to earnings. They also had some Libya concerns, some North Africa concerns of some of the turmoil that's still going on over there. As far as the reaction here, it was trading up above 36 pre-market. It sold off pre-market, opened where it did down here around 35.40, 35.50, rallied all the way back up briefly, and then it's failed into the close here with a pretty strong volume gravestone doji. I'm very interested to see here where Marathon decides to go. If Marathon breaks 35 after this action, and we continue to see oil fall, chances are we're going to see Marathon trade back down here around 33. Okay, the market stays up, stays strong. Marathon closes above 36. We'll have a beautiful upside breakout. And really, after reading the earnings, that's kind of what I was expecting. I was looking for an upside breakout. We're not getting that. So we may get 33 before we get 36. But from a trade standpoint, it's setting up very interestingly here. So it's one we'll continue to keep an eye on here. Kihu, okay, still beautiful setup here. Still a beautiful setup. The only problem I have with Kihu here is it could gap down $5 tomorrow, still be pretty bullish. Okay, so we'll kind of wait till tomorrow on Kihu here. Costco, okay, actually turning green here. It's got that hanging man candle up at the upper band. I couldn't be a buyer here, though I can't give too many arguments if you use about 119 as your stop there. XLE, okay, for the candlestick challenge. Talked about this a couple times here today. We need XLE to start moving sooner than later. Our time frame here for it to move is quickly fading. We need it to really start to break below 86 tomorrow, and really show that it's going to trade below 86 by tomorrow afternoon into Thursday. If we don't have that, it's going to be a little difficult to hold it with the options that we have here with the XLE. But overall XLE, we still have MACD's going lower. We still have the stock. It bounced yesterday, didn't set a new short-term high. We have some things going for it, and we have a price target that we break 85, we could see this thing flush down to 84. The one thing that's continuing to happen is even with the XLE, not necessarily breaking down, oil's still grinding lower. It's still pushing down. It's still exaggerating its downward trend here with oil. So, we're starting to hit price levels on oil where you're probably going to start seeing analysts come out and cut some of the oil stock estimates that are out there. ABX. Okay, ABX gold miner here. I talked about potentially closing it here at the close here today. Gonna hold on to that here tonight. Um, I don't have great, great hope for it. Okay, but ABX here, we need to start getting above 19 to be in the money. Can that happen? I mean, yeah, I mean it can. For ABX to move 5% in a day isn't a big deal. But with them selling the stock down here at 1820, we have a large supply increase. So it's going to take a big strong move in gold to kind of push that up here. And then with silver, it's turned positive here today. Again, it's in this little bleeder position. Uh, if it were to gap up above the 7 or trade above the 7 here, I would look to add to it. We do have some catalysts for it to start moving here Friday, and so that's what Thursday and then Friday. So that's what we'll be looking at. Jay, you make a really interesting comment. Jay commented, "My ability to enter a trade and immediately start losing money is uncanny." And I'm kind of chuckling at the comment because, in John, I don't know if you're on, John, my trading partner back when we were running the managed funds, um, he would laugh because I'd get irritated if we got in a trade and it started going my way immediately because for some reason the trade would always go against me. If the trade started out against me for the first little bit, I always felt more comfortable, and I think that was just more of a product of the environment, of the trading environment and whatnot. But it'll be 6 to 1. They'll all balance out as it goes forward here. Okay. All right, so we entered for the candlestick challenge some Goldman Sachs puts. Okay, some Goldman Sachs puts. And we bought the November 4 weeklies. Okay, the November 4 weeklies. Okay, November 4 weeklies. The 160 strike for 176. Okay. 163.25 is our stop. We break 163.25, I'm out. And if we're even threatening to break that here at some point tomorrow, I will pull that off or go in and program a stop there. And again, this is for the candlestick challenge. Okay, for the candlestick challenge. All right. Okay. STJ. Normal action for STJ. No, I mean, STJ had the downgrade here today. So it kind of exaggerated some of the selling on STJ. The uptrend remains intact. It has broken the 7, which means your risk is higher going forward here. From an hourly perspective, it came down to the lower band. It's bouncing back up above the 7. It's kind of at its high for the day if you take out that initial trade on the open. It's something if it breaks 57, that would be pretty ugly there. But St. Jude, as far as normal action, yeah, with the downgrade like that, it's nothing that's overly unusual. Now, if you look at some of the other stocks in their group, Medtronic, it's held up a little bit better. ISRG breaking down here and kind of performing like St. Jude's. Yeah, in the group overall, Medtronic continues to be my favorite, but there's just not a real good entry here. It's the risk of buying overbought, and buying overbought works, and buying overbought works until it doesn't, and then it can get ugly fast. So, Yeah, Tesla. Anyone playing the Tesla Lotto? Yeah, I priced some options here on Tesla. Um, with Tesla breaking back above the 7 hour here, just a little bit ago. I can't argue with anybody getting in. I do wonder if it's some sort of ABC like correction where we have our 180 to 172 drop. We retrace that, then we get a drop down to about 168. Do we get something like that? Maybe. But yeah, with Tesla, the option prices, I just, for me to get in, it has to be perfect, and it's just not as perfect as I would like. Kihu is a little more perfect than Tesla, a little bit more perfect. It'd be nice to see Kihu maybe trade down below about down to around 87 tomorrow morning, kind of hold around 87 there. Yeah, AK, very, very, very good observation. Tesla doesn't follow the rules. No, no, no. When you have a stock where valuations are insane. So you have your momentum, you have your hedge funds playing, and your hedge funds get in, they decide to sell before you could expect some sort of 2 to 3 week sell off. Or the hedge funds start to get in, you could expect a 4 to 6 week rally. Things move a lot quicker on those high flyers now than they used to. Exxon. Exxon here has actually turned negative today after being strongly positive. I don't know that that means too much. It's not really a bullish price action pattern here, but it's not a pattern that we have seen so far this year say, oh, this has to go down. It's a pretty bad hammer here. Okay. Yeah, I believe Tesla's earnings tonight or some sort of statement regarding them. Is it their actual report? Let me go double check here. Yeah, after market today. Yeah. So it'll be interesting to see it move 30% tomorrow. It just shouldn't be too much of a surprise one way or the other. Um, as far as another trade, we looked at IBM and we really like the bearish price action here on IBM. Carl showed it as one of his favorites. There's a bear vibe here. Okay. And it's set up beautifully. Uh, we are going to wait till the morning. If in the morning it's a little bit weak, breaking below 178, we'll go after it. Um, don't want to go after too much on the downside, just simply because the market, yeah, is it toppy? Sure, but it's not confirmed on the down, so we want to see, a little more confirmation. So with IBM, we start to break 178 in the morning. We will look to get in there. Let's take a look here. I want to show you Lowe's. Got an email today about Lowe's. Lowe's breaking back up above 50. And you do have a bit of a bullish continuation pattern. Not a whole lot of volume here at all on it. It's outperformed the Home Depots. It's outperformed some of the other home builders. It's a component of the XHB. And Lowe's has been the clear outperformer. And they don't have earnings till the 20th. I couldn't argue somebody wanting to buy into Lowe's here. I couldn't make a good argument against it. But at the same time, with it not really doing what the rest of the market is doing, or what the rest of its sector is doing, that always makes me wonder. It just makes me a little concerned here. Opinions on Tesla earnings? Yeah, I mean, look, the earnings number isn't going to matter. How much money they made, it just isn't going to matter. It's all going to come down to the growth and what the projected growth is. You're talking about. I mean, Facebook's earnings were pretty good, right? I mean, Facebook's earnings were really really decent, but it's trading at a 43 forward PE relative to growth, and that's just huge, huge overvaluation just from that really small metric. You take Tesla. you're talking about 102, which is just incredible from a company that didn't even make money last year. And you're just talking about a PE that's just incredible. And so they could come out and say the best things. And if one of the fund managers decides, hey, time to take profit on Tesla, we could see a Netflix action where it opens at 250 and drops to 170, or we could see this thing open and trade below 100 here today. You start reading analyst opinions on Tesla. They range from 1,000 to 10, where some even think it's pretty much worthless. I think in this market environment and something like this, if I have to throw a bet out there, I tend to favor the put side. But ahead of the earnings, but that's not something that I'm I'm going to go play. And a lot of that's just simply because look at the options. I mean, even if you just come to the regular November options, you needed to trade to move $20 to $25. Okay, $20 to $25 to even break even. Now, can it move that much? Sure, but no, okay, good point. Yeah, bet they blow it out of the water. Only a handful, hold shares. Yeah, yeah, no, very well could. But yeah, it's a crapshoot. It's a crapshoot. Yeah, Intel. I've priced the option several times here on Intel. Looked at getting Intel into Intel several times from a put standpoint. I couldn't pull the trigger. I like Goldman a lot better in the setup here. A lot better with Goldman. Um, one of the things the SMH kind of broke down a little bit here today. Broke the 7 here, has rallied back. There really haven't been any volume going on there. Um, there were some analysts that came out talked about the semiconductor pricings and things like that going forward. But with it, Intel ex dividend here today and stuff, I just said, I won't mess with it. We'll see what it sets up here tomorrow and into the end of the week. Yeah, you have Micron here. Yeah, Micron's in a very interesting spot. Broke 17. Kind of once it broke 17, okay, the short you can't really be short Micron. But if Micron decides to top out before breaking 18 and starts to break back below the 7 and have a lower high after this low volume relief rally, um, it could set up pretty interesting. Nothing that I'm enamored with right here. FedEx is one that one of you, you know who you are. You keep asking me about. I just don't see a short setup yet for FedEx. Yes, you're overbought on every single indicator, every single metric. You're overbought, but you were at 120. You were at 125. You were at 130. Same at 135. Uh, it's one of those things that there's just a huge plowing going on right now of fund managers just plowing into it, and it'll probably top with a very strong bearish candle. You'll probably have some big old gravestone or some big old bearish engulfing. It'll probably end up topping as some analyst comes out and says something, but and creates that type of action. But um, it's not one that I can short right here. In fact, the trade is still long, riding the 7. That's where the trade is overall. Facebook here getting a little bit of a bounce. Facebook still trying to digest the earnings. Remember, after the earnings, Facebook was trading up over 55, then opened down around 47, and it's really just been bouncing here between 48 and 52. And there's not a whole lot, a whole lot there to base a trade off of at this point. All right, you got the put spread. Okay. Okay, and you got a call spread on it. Okay. Yeah, St. Jude. Yeah, St. Jude, classic case, strong bullish signals. Analyst comes out with a downgrade, going to sell off. It's held up okay. It's held up okay here. It is breaking the 7, so the risk goes up with it. I would be very concerned if it started to break 57 on St. Jude. I'd be concerned. You're probably looking at suffering down to 56 before rallying if it breaks 57. But it's look the downgrade. Let me show you the downgrade here. I know it's not probably not a company many of you have heard of, but it's an important one because they are St. Jude isn't followed by every analyst that's out there. So all they did is take it from outperform to market perform, with a price target of 62 from 64. So they didn't yet they weren't killing it. I mean they weren't talking about major problems or issues. It was basically okay, they were taking profits on it, right? Okay, they were taking profits on their outperform and saying, okay, let's go there. So I mean, you can see the analyst ratings over here: 11 buy, 11 hold, one sell. I mean, that's they're a reality of the market that we trade in. All right, so we have some of these new Goldman Sachs puts here. Be real nice to see that thing break below 160 here tomorrow, and we still have the XLE, the SLV. We'll continue to hold on there. Not going to get into IBM or Kihu here. We will look at those in the morning. Those may set up perfectly on the open tomorrow. I was looking at potentially getting into Google on the upside here today. I talked about that earlier. Google's not been able to hold its gains here, so I can't make that trade. Um, can't make that trade. Do you think if Google does break 130, you could trade it higher at that point, but can't make that trade right there. Okay, two quick announcements before I hop off here. Next week on Monday starts our education week. What that is we'll be running a series of 8 classes that will all be recorded. They will all be in here. The classes are designed for those of you who are relatively new with options, to take you from knowing nothing about options and trading options into understanding, what creates gaps and what creates the pricing and how to understand which ways the options are going to move. For those of you who are already with us, who already have been trading options, you may find value in it, you may not. Each class will be 30 minutes. There'll be 2 classes a day. The schedule will be posted here by the end of this week. All the classes will be recorded. Carl will be giving 4 of them. I'll be giving the other 4. Topics range from we'll be talking about just charting basics and picking stocks to trade to implied volatilities, risk reward, option usage, the effects of economic data and earnings on options, futures. We'll be talking about a bunch of that stuff for those of you who are interested. The new challenge will kick off next Friday on the 15th of November. We will kick off the new 100K challenge, and we're excited about it. And can't we're well, you've heard me talk about this current challenge. I'm not real happy with it. There's not much more I can say about it. It's one of those things I can tell you 100 times that they're not always like that. But I also know that the next one there's no guarantee there as well. So, but I'm very optimistic. I think some of these seasonal November patterns that I showed you here earlier will help us to get a good kickoff and a good start to that challenge. And if you're interested in seeing last November's challenge, the one we started last November, just go to traderminute.wordpress.com. It's all there for those of you that want to see that. All right. Well, thanks for hopping on. Any questions? Let me know, and we will talk to you later. Take care. Hey Bart, yeah, just saw your chat come through. Well, the classes include spreads, butterflies, straddle strangles, those types of things. We've debated this. We've gone back and forth on it a couple times. Um, Really, I'm going to kind of leave that up to you guys. In the 8 classes we have, we don't have to talk about those. Okay, we will talk covered calls and selling puts. But if straddles, strangles, butterflies, condors, spreads, if that's something you would like us to put in there, now we're happy to do it. It's there's we're more than happy to do it. The one thing that I've kind of the one reason I'm kind of reluctant to talk about them is simply because they're not something we use here at Trader Minute. Okay, we're not trading the butterflies. We're not trading any of the spreads and anything that requires margin. So that's been kind of some of my hesitation there. But we'll continue to go back and forth on that. If you guys want them, I have no problem in doing that and talking about those more advanced spread type strategies. I'm always a little nervous to talk some of the spread strategies because, well, my opinion isn't very high on them overall. There's a time and a place for them, but in general, I don't see a huge advantage to most of them for the way that I trade individually. All right. Well, thanks for hopping on, and we will talk to you later. Good luck with your Tesla there, and we will talk to you tomorrow. Take care.